So, a little bit about myself, because you might be wondering uh, whether I'm actually qualified to be speaking to you about FCA authorization. So, let me give you a little bit of background about me personally. So, currently, I'm the managing director and the founder of Vedanvi. Um, Vedanvi is a professional services firm that currently helps mainly innovative fintech type of firms get through the regulatory authorization process and comply beyond that point. We also help firms manage risk literally at the board level. And from next year, we've got an exciting launch where we're going to be able to help fintech firms actually launch, grow, and fund their business as well as exit. But I'll give you more details on that when we're ready. So personally, I have 20 odd years in financial services. I started out life as an electronic engineer, and then I actually went on to become a patent lawyer. I was really interested in commercializing intellectual property rather than just writing the patents. So I found my way into an investment bank, and financial services is where I stayed ever since then. So I've worked with some of the largest organizations in the world, and mainly at group level. So companies like Lloyd, Schroders, HBOS, Nationwide, Egg Bank, Aviva, Aegon. Um, and for most of these firms, I've literally helped them deal with regulatory change, regulatory applications, and also developing a risk management framework and dealing with compliance. So the interesting thing is why I started Vedanvi in the form that it is in currently today. So I've always had an entrepreneurial mindset, but I found my way into the corporate world because that kind of was the right thing to do. So, despite achieving great heights, I didn't really feel satisfied. So, back in late 2012, I started Vedanvi in its original form. And really, it's just then that I realized, coming out of it, how closed the financial services industry actually is. And if you're not part of the inner circle, it's really hard to break into it. So we tried to sell risk management solutions back into large corporates. And we realized, the fact that they were so closed. Just then, the fintech scene was really just breaking through, causing a bit of disruption in the financial services market. And it's at that point I pivoted my business because I think, the fintech firms of today are going to be the JP Morgan and Morgan Stanleys, literally within 10 years. So my big goal in life really from a Vedanvi point of view is to be directly involved in helping to build the next Uber or Airbnb within financial services. And I think I can make a bigger contribution by actually helping firms to launch in the right way, grow rapidly, and then exit so that the founders themselves can gain huge advantages. So, as I've mentioned before, I think we're sitting on the dawn of a new age. I think in the next few years, financial services is going to be looking very, very different to what it looks today. I mean, not so long ago, it was almost impossible for any ordinary person to go out and set up a financial services firm like a bank or an insurer. Sure, you could play on the fringes, playing an intermediary role, or you could set up a small hedge fund. But certainly, if you think about setting up a bank, that was near impossible. If you didn't have contacts in the right place and huge amounts of money, you weren't going to be able to set up a bank. Now, obviously, since liberalization of the financial services system, at least in the UK, since 2013, for example, there's been roughly 23 new age type of banks that have been allowed to make an application to the regulators. So, in the words of Klaus Schwab, the founder and executive chairman of the World Economic Forum, in the new world, It's not the big fish which eat the small fish. It's the fast fish which eat the slow fish. And when it comes to fintech, I hear lots of arguments about the fact that fintech firms can literally get bought out by large players, and large players aren't going to go away anywhere. But I think, testimony to Klaus Schwab, it's really people that are bringing innovation, that are nimble, that can move to the needs and address the needs of the clients that are going to succeed. So I think people like yourself has got a huge opportunity that has never been opened before to others that have tried to come into this market. So cherish that opportunity and make sure that you make the best of it. So as I discussed, you're obviously thinking of starting a financial services firm, and I can assure you that you're in good company. And this is certainly one of the areas that's really hot right now. So in 2013, 2014, Accenture did a study, and they found that of all the venture capital in the Western world, 63% at the time was going to fintech firms. Certainly 2015 has probably been the hottest year for fintech from an investor point of view. Admittedly, things are slowing down, but it's really just a market normalizing and then growing at a kind of a ready and steady state rather than through a hype curve. So let's take a look at some of the examples of where fintech firms have actually got to in a very short space of time. So let's take Funding Circle. We all know that firm quite well. They literally only started in 2009, and just last year they reached $1 billion in valuation. Their valuation is 48 times their gross revenue, actually. So quite a staggering valuation. TransferWise started in 2010, Stripe in 2010 as well. Zenefits is actually a really interesting case study. They went from zero to $1 billion within 3 years, literally 3 years. So it's really phenomenal. Klarna started in 2005 and Credit Karma in 2007. All of these are the unicorn club. And there's many more. There's over 100 unicorns now. So I always say that in the world of fintech, 1 year is probably equivalent to about 50 years for a normal bank. Now, normal banks, normal insurers can never move as quickly as this. So I think, really just to reiterate, you're in the right place. You've got a platform that gives you super growth. You obviously have to overcome some of the hurdles, and that's one of the things that we'll go through today in the form of an FCA or a regulatory application. So I really love this picture because when my clients eventually get FCA authorized, this is exactly how they feel. It's a jubilant feeling. It's like getting through a major milestone and having the freedom to literally go out now and achieve your goals because you've got access to a much bigger market. You've got credibility because you've got access to a wider market. An FCA authorization can allow you to grow market share, because without FCA authorization, you can certainly operate in an unregulated way, but your market's going to be really just high net worth individuals or businesses in some way. The minute you get through FCA authorization, you're then open to a huge retail market. And there's lots of pockets of gaps within that market to take advantage. So one of the biggest reasons that a lot of fintech firms actually went out to the regulator proactively and say, regulate us, is because initially they lacked a bit of credibility. They lacked the confidence of the market. And by getting through the FCA process or the regulatory process, it gives them a sense of credibility and a sense of trust. Trust from stakeholders who want to partner with you, and also from customers, because it's really quite a lot of scrutiny that you have to go through when you go through an FCA authorization. As I've mentioned, larger organizations will come and either partner with you, try and buy you out because they want to potentially use your license or access the markets that you've been successful at accessing. And there has been cases, where bigger firms has actually gone out looking for those firms that have had a license, for example. I think what I also want to really emphasize that if you go through this process in the right way, then it's really a blueprint to build a business which can run in a very, very efficient way. And it's also a business that can generate valuation for you. Most of you will be looking for an exit at some point, and valuation is the key thing that you're going to be building between now and at the point where you exit either fully from the business or sell a large proportion of your shares in the business. So really, I think, this is a fantastic blueprint. This is a fantastic opportunity. Most people will treat the FCA authorization process as a form-filling exercise, whilst I believe that it gives you the blueprint to build a successful business. If you've read some of the testimonials above, then you will have noticed that my clients have certainly benefited by implementing the systems and processes according to this blueprint. Had they started a business without this process, they certainly wouldn't have been in a position where the business was built on a solid foundation. So just taking a case study, really, we've had a client who admittedly took quite a while to get authorized because they had an innovative business model, which the regulator couldn't get their head around. But because it took such a long time to get authorized, they started running out of money, and they went around the market looking for investment. So the background of the firm, there's five very solid people coming out of financial services starting the business. They've put all the processes and policies in place. But despite that, the investors wouldn't give them money until they actually got authorized. So the investors really only placed value on the firm if they were authorized. Without authorization, the valuation was zero. So as soon as they got authorized, the investors, obviously subject to them getting authorized, the investors then valued the firm at £1 million. So this was literally, they haven't traded one day in the market, and they were valued at 1 million as soon as they got FCA authorization. So I really love this diagram. It's not coming from us, but it's actually coming from Sherlow's group. It's a partner firm of ours. So Sherlow's actually went out and understood what drives valuation. So valuation really is a multiple, effectively, of revenue. And generally, there's an industry benchmark for certain types of firms. So, for example, for fintech firms, it's going to be 5 or 6 times the valuation of after tax or net profits, really. In order to increase your valuation, you need to have different types of things. For example, talent, capability, and culture gives you valuation plus another 2, so it ramps up your valuation. If you have systems that are documented, for example, that gives you valuation plus 3. Now remember, through the FCA process, you're going to come out, as we'll see later on, with documented logbook, effectively, or a documented processes, and an understanding of exactly how the business is going to run on a day-to-day basis. And there's various other layers which has the valuation. But just below the line, if you don't manage your business in the right way, then that decreases valuation by a significant multiple. And so, again, what the FCA will want you to do is to make sure that your business runs in a proper way on a day-to-day basis. So effectively, you're cutting out all the minuses by going through the FCA process in the right way. Now, make no mistake, the FCA authorization process is certainly not a walk in the park. Generally, people come into it thinking it's a form-filling exercise, and then when they actually go through the process, especially for fintech firms, which tend to be innovative and coming up with disruptive ideas, which are not common in the marketplace, and which the regulators need to get their heads around. And that presents significant challenges. There's going to be a significant time commitment from the founders and the managing directors and the directors itself. There's going to be resource needed throughout the process. I think what you'll find is that it's going to absorb literally everything at a time when you're trying to launch and build your business. But I also say, it's a very time-consuming exercise. But what I do believe is that if you approach it in the right way, which I've hopefully demonstrated to you that has benefit, but also approach it in a way like a sprint. Get through it quickly. If you linger on, it becomes a more and more painful process. And I've seen firms that, if they lose that momentum, can take 1 year, 2 years before they actually prepare. I should do it in the right way, and you're a relatively straightforward business. I can assure you that the process I'm going to take you through will help you prepare within 90 days. Hopefully, I've demonstrated to you the why. I've helped you reconnect to your why. It's probably good to go back and think through why you actually want to start a financial services firm, and keep that picture in mind when you're thinking of FCA authorization. Now I want to actually go through what is actually involved within a regulatory process. So let's explore that in more detail. So there's a couple of ways that you can enter a financial services market. Firstly, there are certain type of things that you can do which doesn't need a license at all. And you can go straight into the market. You can start trading. Obviously, I would always suggest that you make sure that you're not doing something that is actually regulated, that you may think is not regulated. So it's worthwhile seeking professional advice. And you may want to contact somebody like us or go to a law firm. The second category is the activity that you're going to perform is generally regulated, but there are certain exemptions or exclusions within the regulation that allow you to trade, but there are strict conditions that you have to meet, and effectively you have to comply with those conditions. Although you are unregulated, you have to comply with those conditions. And on a day-to-day basis, it's going to be really hard to stay outside the regulatory net. So you have to make sure that those conditions are complied with every single moment of the day. The third option, and most people want to get into the market as quickly as possible, especially in the world of fintech, where, as we said, 1 year is equivalent to 50 years. It's really a long time to lose. Then you could borrow somebody else's license, and I'm sure you're aware of this, that there's a principal and an appointed representative route that you can go under. Now, bear in mind that that's an option, but it's going to not be suitable for everyone, because effectively you've got an even stricter regulator that's going to regulate every single thing you do. Now, why are they more stricter? Because anything that you do from a regulatory perspective, it's actually the firm, your principal, doing that. And so, they get vindicated by the things that you don't do. So they're going to be very cautious before they take you on, and on a day-to-day basis, they're going to manage you very closely. So, for example, every financial promotion or advertisement will have to go through them. Every time you want to appoint a board member or a senior manager, you're going to have to go through them, etc., etc. And generally, most people find that that becomes a little bit restrictive for their business, and they want to get out of that process as soon as possible. Having said that, though, it does get you into the market very quickly. It's also not it's not a cheap process. It's quite an expensive process. So bear that in mind. And obviously, the last route is you can either start trading in an unregulated way, and generally we advise our clients to go down and explore any unregulated options while they're preparing for authorization, and then get directly authorized, which then gives you the freedom to go into the financial services market in the broader way. So it's also worth bearing in mind that within the UK, there are two regulators. We've got the FCA and the Prudential Regulatory Authority. The FCA sits under the Treasury, the PRA sits under the Bank of England. The two have got different objectives. So the FCA is more concerned about consumer protection. It wants to make sure that the financial system operates with integrity. And it also, interestingly enough, which is very different to other parts of the world, it's there to encourage competition. And that's why it's such a big supporter of Fintech and alternative finance. The Prudential Regulatory Authority is actually looking at more widely at the financial system as a whole. And they're there to make sure that these large banks and large insurers don't actually put the financial system at risk like they did during the crisis. So generally, you will find the larger firms being regulated by the Prudential Regulatory Authority as well as the Financial Conduct Authority. So they are dual regulated by both the regulators. But typically, fintech firms that are coming in would only be regulated by the FCA. And obviously, this presentation from here on will only focus on FCA authorization and not a Prudential Regulatory Authority's authorization. So if you are starting a bank, for example, then the PRA is going to play a much bigger role than the FCA. But anyway, as I said, we're going to be focusing purely on the FCA as we go forward in this presentation. So I always say going through the FCA process is like going through a gateway. For example, when you go into another country, you have to pass border control. And effectively, when that person hands you over, the officer hands you over your passport, they giving you the freedom to do whatever you want to really within their country. So therefore, they need to make sure that you're the right person with the right integrity, and that you're not going to do things that you shouldn't be doing. And similarly, the FCA wants to make sure that you're the right kind of person that's going to do the right thing once you get your license. So the gateway really, from an FCA point of view, they've set up threshold conditions that you have to get through in order to get through the gateway. So here are the key components of what they look at. So the things that they will assess you against in your application. So firstly, you have to be trading in the UK, or at least the head office must be in the UK. And what they say is the mind and management has to be in the UK so that they can hold you, the senior people, accountable and can actually do something if you don't comply. They must also be able to effectively supervise you. Now, what will generally happen is people will put complex structures across jurisdiction to try and avoid being regulated by the FCA. And generally, people will set up to go into less stringent regulatory environments and set up there and then try and expand or extend themselves into the UK. And by so doing, sometimes they may not meet the strict standards of the FCA. So the FCA will generally want to look at your corporate structure and will look at the intricacies of the organization as a whole. And anytime you put any layers, just be assured that that's going to be scrutinized very, very thoroughly. The next thing really is that, they want to make sure that you're a sustainable business. So you're not going to bring in clients and then close down to their detriment. So they want to make sure you've got adequate human resources to be able to conduct the business in a safe way for your clients. And you've also got enough financial resources so that you can sustain yourself through the ups and downs and still carry on and not shut your door. The other big thing really is that they want to make sure that the people that are actually going to run the business and the firm itself is fit and proper. So, any past criminal convictions or any time that they've got evidence that you're not going to treat customers fairly or not going to behave ethically, they certainly won't let you get through the gateway. And that's one of the biggest reasons why, most firms that fail actually fail. And finally, they look at your business, literally piece by piece, and they want to understand exactly how you're going to operate your business on a day-to-day basis. So that was more what the FCA authorization process is all about and what the regulatory gateway is actually involved in terms of assessing you against. Now that you understand what's needed and how the FCA is going to assess you, it's more an understanding of how you can actually go about preparing for an FCA authorization process. So generally what will happen is you will prepare an application, you will prepare your organization and documentation that you will submit to the regulator for them to review. Now, if you were, for example, starting something complex like a bank, generally you will start having conversations with them before you even go down the application route. So they want to understand what you're going to be doing in the market, what your plans are, and you'll have lots of extensive dialogue with the FCA before you even start preparing. But for the sake of the FCA, generally the pre-application stage doesn't actually apply. So from an FCA point of view, you would prepare your application, and then you would submit your application. Now, between the preparation and submission, as I said, if you do it in the right way, you can actually get that done in under 90 days. And again, I urge you to keep the momentum going so that you can get through the process as quickly as possible. Once you submit the application, the FCA will take time to review the application. And by law, they have 6 months to review an application that is perfectly completed, what they call complete application. And they could take up to 12 months and actually beyond for applications where they believe they're incomplete. Now, most applications happen to be incomplete, so it gives FCA an additional 6 months to review your application. Some of the innovative businesses like peer-to-peer are currently waiting probably more than 18 months to go through authorization, and that's because of the complexity of the regulation. At the end of the process, they can either authorize you, they can refuse you the application, but in most cases, they will encourage you to withdraw your application. So you will see some people falling off through the process. Bear in mind that the FCA will not hesitate to refuse an application because they want to make sure that only the right kind of people actually get through the process. So we've done a number of applications now, successful applications, and we've broken that whole process down into some defined chunks in a model, which actually works if you go through it in that step. So it's a 5-stage process. Some of it works in parallel, but it is kind of sequential. And we'll go through this in a bit more detail, section by section. So the 5 components are strategy, business model, applicable rules, resource, and technology and systems. And we call this the SMART authorization method. I'm not aware that any of our competitors have analyzed this process to this level of detail, but it certainly does work. So let's look at strategy. So in this phase of the program, you will actually initially, if there's an option, you will look at ways to enter the market in an unregulated fashion. It's really just a quick market entry strategy. Start earning revenues while you're actually going through your application process. Now, bear in mind that this is not going to be open to everyone. So bear that in mind, but you can structure your business in a way where it's unregulated. And certainly, this is something that we do on a day-to-day basis for clients. And a lot of the overseas firms, when they get in, obviously want to start trading as quickly as possible. You'll understand your regulated business strategy when you go through the step. I think key really in here is to define your culture and values on which your firm is built. And the FCA wants to actually get that across in your application. If you demonstrate to them that you've got the right culture that's going to permeate in your organization as it grows, then you certainly stand a good chance. You'll set up your strategic objectives and operating principles. Again, this is something that the FCA will want to see. And they want to see evidence of that within your documentation. Treating customers fairly has to come across in everything that you do, and has to be kind of, the tone has to be set at the top. And then lastly, as I said, the corporate structure and shareholding is something that you will have to understand, work through. Now, if you go through all of these processes, the documents that will emerge really is, if it's possible, you can enter the market in an unregulated fashion, then you'll come up with a strategic document, and typically people like us would give you a report showing you ways to do it, or you may well get a legal opinion. Then it's key to document your value statement and operating principles, and giving that to the regulators so that they can see the foundation on which your firm is built. You'll put a corporate structure in place, showing them all the different entities that form part of group. So remember, they don't just want to see the regulated side of it. They want to actually have a full picture. And they will scrutinize everything above and below in terms of corporate structure. We always suggest that a treating customers value charter gets drawn up at this stage, so that it gives regulators the confidence that you've thought through and documented how you're going to be treating them in a fair way. And this obviously then has to get permeated across all sections of the organization. At this point, you're going to have some sort of brochure, because you're starting to talk to people in the market, and that document certainly has to go into the application if you have it. So then, once we've got the strategy in place, the next thing is then to understand the business model. So firstly, you've kind of gone through the culture. Now you're going to actually look at, what is my business model? So am I setting up a crowdfunding company? Am I setting up a peer-to-business lending? Is it a payment system? Am I setting up an insurance company or an asset manager? Or, am I going to sell credit data, for example? So that business model then comes into it. You also need to, in your communication with the FCA, give them an idea of your medium and long-term plans, because FCA doesn't like surprises. So, you would consider all of that. You would then look at roles and responsibilities of senior management. And that's going to be a key thing which determines your organizational structure. Who goes into what box, and have they got the right skills? And overall, has the board got the right type of skills? Now, certainly in the early days, they don't want you to have a huge organizational structure. And certainly one person can take on more than 1 or 2 or 3 roles. And you can actually outsource certain types of activities. But they need to make sure that you've got adequate human resources. They want to have an understanding of the product types that you're going to be launching, as well as the marketing strategy for all the products across different channels, and split by marketing sources. If you are going to outsource, then they want an understanding of who that is, what the contract's in place, and how you're going to actually manage the outsource arrangement. So to sum it all up, really, you're going to be producing a regulatory business plan which sets out in great level of detail exactly how you're going to run your business on a day-to-day basis. And this is where I think, a lot of the benefit comes in for your business, because not many businesses, especially startups, have such a clear plan when they start trading from day one. So, one of my clients, Simon Christman, as you may have read his testimonial, he's started and sold 4 businesses, all non-financial services, by the way. And now he's starting a crowdfunding firm. And he said what he's had to go through by going through the FCA process, he's never had to put that level of preparation in starting all those 4 businesses. And he actually realizes the huge benefit that it's going to give him from day one in his business. So anyway, coming out of this process, you're going to get the regulatory business plan, which is going to be a detailed document of how you run your business on a day-to-day basis. You're going to get a governance arrangement. So, how are senior managers going to actually manage and oversee the business on a day-to-day basis? You're going to get a clear understanding or a document of the organizational structure chart, which you will have to give to the FCA in the business plan. They'll want you to consider, do a strategic risk assessment, not only for the firm, but also for the customers. So you need to understand the risks that your firm and your customers are exposed to, and then give them a very clear plan of how you can actually deal with every single risk. And so really a strategic and operational risk assessment is a key part of this process. And then if you've got any outsource arrangements, they'll want to see the contracts that you're actually putting in place. So now that you've got the strategy and you've got the business model, the next thing is then really to understand the regulatory landscape. So in order to trade, you will need to apply to the FCA for regulatory permissions to carry out certain activities. This can really be a minefield because, there are quite a few permissions out there. And if you apply for the wrong permission, you could end up doing the wrong business with the wrong permission and actually breaking the law. Or you could end up in a situation where you restrict yourself and then it takes you, further 6 to 12 months to get a variation of your permission so that you can do what you actually wanted to do. So you could end up wasting quite a bit of time, or in the worst case, actually breaking the law. You obviously have to show them how you're going to manage compliance, and that you are going to actually comply, and how you're going to manage and monitor that. And one thing I always say, you have to understand, so this is not just your compliance people, but literally senior management has to understand the rules, because you have to abide by the rules on a day-to-day basis within your business. The FC also holds certain people accountable. So anyone holding a control function, which is a important function within the organization, they have to get approved separately. And as I said, you need to demonstrate to them that you have a plan to monitor compliance. So really at the end of this process, normally what will happen is you will actually, there's about 7,000 odd pages of regulation that the FCA handbook's got. And you will go through literally line by line and extract those regulations that are relevant to your business. And then against those, understanding how you're going to comply, who's going to take responsibility, and how you're going to monitor compliance. And that effectively will produce for you a very detailed compliance procedures manual. And I'm not just saying this, but the feedback we've got is the way we do this. It really gives you a very broad understanding at a very, at a macro level of exactly how you're going to manage compliance on a day-to-day basis, and what documents and instruments you're going to use to go through that process. Apart from compliance, you also have to demonstrate to them that you've got a firm understanding of how you're going to manage not just compliance, but also risks, and therefore a framework document. At this point, they'll want to see terms and conditions between you and your clients, because they want to see if there's any unfair contract terms. They want to see, what kind of contract you're going to actually be putting in front of mainly investors and retail investors, or on the other side of the equation, finance raisers. And then lastly, the FCA, apart from the firm getting authorized, will also authorize certain key individuals like the executive directors, non-executive directors, the CEO, compliance director, money laundering reporting officer, somebody who's actually going to manage client money on a day-to-day basis. And they have to submit an application to the FCA separately. So finally, once you've gone through the strategy, the business model, and got a compliance manual, now you've got to think about the resources that you're going to need and put in front of the FCA to satisfy them that you've got appropriate resources in the business. What you'll also have to show them in terms of resource is an understanding of if you were to go bust tomorrow, and you've got certain investors invested through certain products, for example, then obviously you can't just leave them in alert. So you need to have a proper resolution plan or a living will, really, which details exactly how you're going to wind down, your clients, your investors, or your borrowers, in the most expedient way, in a way that protects them. So therefore, you're going to have to keep some money aside in order to fund that, for example. And lastly, obviously, there will be a capital requirement. So, it's literally skin in the game that the FCA want you to have to make sure that, if something goes wrong, there's enough money to wind the firm down and make sure that your clients are not prejudiced in any way. So coming out of this, you're going to have a human resource plan, effectively understanding the number of people and the positions that you're going to need to fill, including any outsource or contract arrangements. You're going to have to also have training for these individuals to make sure that they comply. And then in detail, they want for the next 12 months financial projections. So the latest financial statements, if you're already trading, from the point of authorization, 12 months beyond, they'll want to look at month by month a profit and loss projection, a cash flow statement projection. They'll want an opening and a closing balance sheet, really. And they will scrutinize this, and they will cross-reference. And I've had cases, for example, where the FCA has come back and said, based on your financial projections, we think in month number 3, you're going to run out of cash. And therefore, the capital adequacy, which is 0.6, we want you to put more money into the business from day one so that you're going to withstand some of the shocks. So bear in mind, the financial statements are not just a, thumb in the air guesstimates. Remember that those will be scrutinized, and the FCA will hold you to it and ask you to put more money into the business if they're not satisfied. Now, in some cases, you may also need a professional indemnity in combination of capital adequacy to make sure that, you can wind yourself down in the right way. And then, as I said, you will need a very detailed document of what will happen if you were to go out of business. And lastly, which I think is probably the most important aspect of the preparation process, you will some way, if you're a fintech firm, you're going to have some kind of technology as the central asset, really, in your business. And you will have systems and processes. So the documentation that you need to prepare is you need to demonstrate to them the complexity of your IT system, which they will look at. They'll want to actually see the specs behind it. They'll want to see they'll actually want to see the system itself, as well as the risks and how you're going to govern and manage the system. Because obviously the transactions that you do are going to be based on the algorithms that are built into the spreadsheets, or the system. Sorry. Um, and then I think this is the key part. So you will have documented operations manual effectively, which, if you remember, the valuation model gives you valuation plus 3 if you had documented systems and policies. Now, also, if you have documented systems and policies and effectively an operations manual, it gives you the ability to scale very quickly, because if those operations or the policies and processes are actually implemented and working as they are documented, you could literally lift that and drop that to when you expand into the US, for example, or France or Germany. It also demonstrates to the investors that are coming on board that the documented policies and processes will make sure that the business is not reliant on the founders, can actually grow beyond the founders. So, if you further down the line wanted to sell the business, then the business is not dependent on the founder, and therefore has a lot more value. So I think this is a key component, and it really sets the blueprint of how your business is going to run on a day-to-day basis. Now, encompassing all of that, you need to make sure that you're building the right kind of culture where people take compliance seriously, that puts the customer at the heart of the organization. And I also know that most people fail to actually tell their customers the effort that they're actually going through in order to protect them. And that can be potentially a marketing asset, which a lot of firms are not actually using. So we've now gone through a series of steps which will help us to prepare a very comprehensive and high quality application that then has to go to the FCA. And now, what I always suggest and impress upon really is that before you send your application, make sure that it gets reviewed internally, or you may want to get somebody externally to review it and give you comments, critiques, so that you make sure that it's accurate, it reflects really the right type of business, in an accurate way, and the quality is really is good, and you got to demonstrate to them that you're going to be meeting the threshold conditions. So I would urge that review is taken really seriously. I know at the end there's an urge to just say, let's get the hell rid of it. But I think it's really important to make sure that you go through that review. So you've submitted the application now, and typically that's done so once you've reviewed the application, you're going to come across areas where you've got gaps. You would then remediate that and compile and submit the application. What normally happens is at that point you go into a waiting game until a case officer is actually assigned. So that could take anywhere, from 8 weeks to 18 weeks, literally, because the FCA is very resource constrained. So as soon as a case officer is actually appointed, they'll get in touch typically with the CEO, and then they will review the application and start asking questions. Now, it's really crucial that you answer those questions to them as quickly as possible and provide any additional documents, evidence, enter into dialogue as needed. They may also call key people for an interview. And again, I stress that it's really, really important to prepare for such an interview. I think it's absolutely useful to go through some kind of a mock interview. And we do that quite often with some of our clients. So once everything is satisfied by, the FCA is satisfied, they'll generally come back to you with we're minded to authorize you, subject to you fulfilling certain conditions. And if you fulfill those conditions, then let's agree a date when you actually can go live. So once the evidence that you've fulfilled those conditions, they'll agree a date, and hey presto, you get authorized. Once you are through the gate, you don't go free, and you can't really do whatever you like, because like a border control, there is the police then that supervise you and enforce any non-compliance. So that really, in a nutshell, is the FCA authorization process. So, I've gone through in the beginning explaining the why, and hopefully connected you to your why, and showed you that starting a financial services business, you're on the right track. I've also showed you the key advantages of an FCA authorization. When approached in the right way, now, I think most people look at it as a form filling exercise, and some of our competitors really go through that process. But I think you've got such a huge opportunity here that don't waste it. And then we've looked at what the FCA criteria and how to meet those. And then finally, we've taken you through step by step, using the model, how to actually prepare for the FCA authorization process. So really, as a next step for you, I presume that this was a 1 hour presentation. I can't cover 90 days in 1 hour, so I'm sure you're still going to be left with many questions, such as, have you got the right business model? You're looking at it from a strategic and a regulatory point of view. You may even ask, actually, do I need to be regulated? What are the alternatives of you may not want to go down this path. I think, how long will it take, and are there any early market entry strategies? So yes, it takes between 6 and 12 months, but yes, if you've got an innovative business model, it could take up to 2 years. So you certainly don't want to wait for that length of time. So you may want to go into the market sooner. I think if you're an overseas firm, and we do deal with a fair amount of these firms, you probably have a question of how to launch in the UK before you even go down the FCA path. I think some of you may be wondering, this seems like an enormous task. Where do I actually get started, and how do I develop the documentation to succeed? And I'm sure there's going to be many questions that's currently going through your mind. So obviously, we'd certainly love to work with you, but I guess you've got questions about Vedanvi working with us. So really, as a low barrier way to working with us, we'd often, the next stage really is for us to engage typically in a strategy session, where instead of going through the generic FCA presentation, we specifically look at your case, answer your very specific questions, and at the end of the process come up with a specific plan for you. And the way we really suggest we do this is we get your whole team involved in this exercise rather than just one individual. And so I invite you really to think about working with us on a small engagement to help you build your plan and get clarity. And really, this is the process that if you decide to go ahead, and really do hope you do, then this is the process that you'll actually go through. So starting out, as soon as you decide you want to go ahead, you'll automatically get a detailed questionnaire which helps us really get an understanding of your business, your aims, aspirations, your fears and frustrations, and really understand where you're trying to get to, where you feel you need most help. And so it gives us an opportunity. I guess it also gives you an opportunity to, get what's in your head and put it down on paper. And generally, you'll find that this is a time where you'll find the difference between you and your co-founders, for example. Now, because it's out there, written down, you will identify those areas of divergence. So once you fill a questionnaire, you send that to us. I personally will prepare for the session. So I'll go through all the questions, understand your business, prepare for it. And then we go into a 90 plus minutes. So if it's going to take longer, it's going to take longer. If it's going to take 2 hours, if it's going to take 3 hours, I'll be committed to whatever time you need to go through the process. We'll record that session. So I suggested that's an online session so that we can record it. It also means that, if you've got dispersed teams across the country or even internationally, then all of them can participate. If it's an in-person thing, sometimes that's not involved. Having said that, if you insist you want an in-person session, then I'm happy to do that as well. So once that session is over, we'll immediately send you a copy of the recording. We then go away and analyze, the session itself. And during that time, while we are analyzing and writing up your report, you have access to me by email. Whenever you need to ask any questions, you can just fire it off and I will answer that back to you. So within a week, you'll get your bespoke report. We'll have a to and fro before we finalize that. And then I generally will follow up with you in about 2 weeks' time to see how you're getting on and answer any further questions. And hopefully beyond that point, we'll be able to engage on a bigger project at that stage. So as I mentioned, this is a lower barrier to working with us. And I think really the outcome of this whole session is that you're going to be a lot more clear on whether you should go regulated or unregulated, whether you should borrow somebody else's license or just go for your own license from day one. And then we'll be, coming out of that, we'll be very, very clear on, if there are any earlier market entry strategies, what they are. I mean, that effectively will, have a huge revenue implication if you can get into the market quicker than you initially thought. It also gives you a direction on your strategy, your business model, the regulatory permissions, and that is something that we will look at. We will look at your business model, compare it against the regulation, and come up with a recommendation of what regulatory permissions you will need to actually apply for. And coming out of this, you'll also get an understanding of what kind of team you need on board, either in the form of staff or co-founders, or outsourced or contract arrangements. And I think you'll get a good sort of step-by-step way, specific plan for you on how to start preparing, in the form of a bespoke plan. Hopefully you've been recording some key questions while we've been going through the process. You'll also be able to send us questions. I think you've got an email address from the emails you've got from me. So do send those off to me. In future, we're trying to actually set up a podcast to answer specific client questions in an open forum. So over to you, really.